Hey YouTube, this is Zach with Achilles Financial, and today the goal is to talk about what are we going to do if we have cash on the side, and with everything hitting record highs and all these stocks exploding, what do I need to do with my money? I feel like right now, and this is something that I am coming to grips with personally, is I've had a few big wins over the past few weeks, and I have sold out of those positions, and now I have all this cash on hand. And my first instinct is, hey, I need to go spend this. I need to go invest. I want to ride some of these waves. I sold out of XPEV at $42 a share after selling a $42 covered call that was 20% out of the money, and it ended up being exercised because the EV stocks have been on fire. But I'm having some big wins, and that's leaving me with a lot of cash on hand as I start to be exercised on some of these covered calls. What I'm looking at doing now is if I have cash on hand, what is the next step? So what I have here on screen is this is the paper trading account capability on Thinkorswim. So this is not real numbers. What you see on the screen right now is an example of some puts that I sold on DraftKings earlier this year, and those have turned around. You can see over on the right hand side, those puts have returned about a 40% growth, and the actual shares have come in at right at 17%. And this is a similar strategy to what I'm looking at doing under our covered call scenario, or rather under our cash on hand scenario of what if I don't want to invest in stocks, if I anticipate that there may be further developments in the stock market. And again, whenever you're looking at a stock market that has all these record highs, I think it's okay to be wary and make sure you're very deliberate in what you are picking. So one of the strategies for this is I would recommend selling puts, cash secured puts on stocks that you would be willing to buy. So in the example that I have here on the screen with DraftKings, one of the key things that I'm going to be looking at for these stocks is I want to see a downward trend. And as you can see, over the past 3 days, we have this downward trend from left to the right side of my screen for DraftKings. So again, we kind of bounced off that 50 mark twice, and then we started coming back down, with most of the moves really coming in overnight or at the very beginning of the day trading. You can see some of these moves down right here. Personally, I'm very long in DraftKings. As you can see in this example, my entry price was $40.95. So that's where that 17% gain is coming from. However, I don't necessarily know if I want to pay $48 a share if I think that there may be more closings, or maybe sports teams will not play, which could affect some of the revenue associated with DraftKings. If that's the case, what I have the capability of doing is selling a cash secured put. So this first one is going to cost about $4,800. What I'm looking at is here at the end of the year, at the bare minimum, I would be pulling in or selling the option to purchase 100 shares of DraftKings at $48 a share, which would cost me $4,800. And you can see that in the review right here, that this is what we need to have the capability to purchase that. So that cost is going to be someone paying me $410. My resulting buying power is accompanying that, going down by $4,400. Again, let me emphasize that this is just a paper trading account. See paper money. These are simulated values. This account value starts out with $200,000, $100,000 in the option buying, $100,000 in the stock buying, and then $10,000 in the Forex. So that's what we're looking at here. Again, we have that information available. But as you can see, someone is going to pay $410. So at the bare minimum, this is again going to the end of the week. So the end of the year, December 31st. So at the bare minimum, your max profit, if the stock let's say that the stock continues to rise, or at the bare minimum, it ends at $48 a share or above, then what you would be looking at is that $410 investment over your $4,800. So you're looking at an 8.5% return on investment. Now, me personally, what I'm obligated to do here, or what I'm willing to do here, is purchase those shares at $48. So the only way I start losing is if the price is under $44 a share. Now, I thought it was overvalued today. I may not think it's overvalued at that point in time. Now, some of the risk is the stock does have the capability to crater, and you can see where those get to be some pretty scary numbers. However, if the stock ends up going to $40 a share, back to that original price, I'm okay with purchasing it at that price, as you've already seen. So that's some of the advantages and disadvantages of a cash secured put. But the way that I'm going to approach these is I'm looking at stocks that have been in a decline, despite the fact there are a lot that have been going up. So I'm getting paid to purchase stocks that I like. This is a very, very popular strategy with Warren Buffett. Another stock that we've talked about a lot on this channel that I would highlight is one that I'm going to be looking at for doing this is TSM. And I've already got the option loaded up. The reason instead of the end of the year I've selected December 11th is because they go ex-dividend on the 17th. So if I'm going to purchase these, I want to be able to purchase them at prior to their ex-dividend date because they do pay a decent dividend. This isn't 100% accurate. It's right around 1% at this point in time. So what I would be looking at here is, as you can see, $95 put, which is relatively close to the money. So if that trend continues, you can see most of this is coming from the fall off today. If this tech trend continues for them, then what I would be looking at is pulling in $203, and that would be paying for my purchase of the stock that you can see here. So this is a much more expensive investment and a little bit less volatile stock. So as you can see, that $203 investment is going to be paid to me. However, there's a little bit more money to lose that you can see here. But that $203 over that $9,500 is a little bit smaller of a gain there. You're really looking about 2.5%. However, that is over 17 days. So that's one of the other stocks that I'm looking at. Again, we're looking for these stocks that we really, really like. Another stock that I'm a huge fan of that I think has a lot of potential for this trade is NVDA. As you can see, we've got that downward trend coming off of a very strong earnings report. I'm personally very bullish on NVIDIA. What we could be doing here, that exact same trade, we're going to sell that put. So you would sell put, and what you're going to do is I'm selecting that 520 because we're under that right now, and I am very bullish on the stock. But I'm willing to go to the end of the year. And the reason for that is, as you can see, they're willing to pay $2,700 for that trade. This is not one that I personally could do it because you need $52,000 cash to be able to handle this. But as you can see, you walk away with $2,700, which again is right at a 4.5% gain over the course of the year or over the course of the next month. However, you do have a lot more room to lose if the stock were to crater. But again, I think that this is a stock that could be $600 by the end of the year. So we'll see what happens here, but this is just some of the ways that you can utilize cash secured puts to continue building income and potentially purchase stocks that you believe are worthwhile investment. So that's what I'm going to be looking at doing coming into the end of the year, because I do believe that the stock market has had an incredible bull run, and I don't know if I want to purchase at this point in time. So let me know in the comments below of any stocks that you think would be worthwhile to be trying the strategy on. And if you found this content helpful, as always, please leave a like and subscribe. Thanks everyone. Talk to you later.